What is going on YouTube? My name is Lucas and today I'm going to be going over the Q3 earnings call that Workhorse conducted yesterday. And the reason is because, well, there was some very positive information that came from that, but there was also some not so positive and a little bit of bad news that came from that. And I really want to break that down and provide you guys my perspective on this and where the company is heading moving forward. So if you're interested in Workhorse, which I know a lot of you are, stay tuned right after this. Before we dive headfirst into this information, I ask that you guys smash that subscribe button, smash that like button, comment down below, and now it's time to see what Workhorse is all about. November 9th was the Q3 earnings call for Workhorse. Let me tell you, there was a ton of anticipation for this earnings call. I mean, rightfully so. You had the United States Postal Service contract that could have been mentioned, could have been announced, and then on top of that, you had actual earnings, which, leading into it were expected to not be very good. But then there were some anticipation on seeing what they've accomplished. How many trucks have they produced? Are they on track to really hit their number that they really, foreseen and projected for 2020? There was just a lot of information. So I'm going to break down the good and the bad, obviously, and I want to provide you my own perspective on this stock. And so I'm going to swing over here and provide you out the gate the good information and really some positivity at which they accomplished within the Q3. So swinging on over here, starting in October, and it'll go downward obviously towards July. So October 2020, which this is brand new information. This came out just yesterday as well. They received a purchase order for 500 C1000 trucks from Pritchard Auto Company for its national fleet program, which is being financed by Hitachi Capital America. So you can see the partnership right there with Hitachi coming into play. Obviously, the Pritchard Auto is a huge deal. Pritchard is a well-known company that's been around for years and years and years. It's based out of Iowa, and that is a huge deal, especially for getting 500 trucks. Now, with that being said, obviously Workhorse has a backlog of 1,700 trucks already. And as we will see, they were affected by the coronavirus, but that is absolutely amazing news. So continuing on, submitted a formal type certification application to the Federal Aviation, the FAA, for the company's Horsefly unmanned aerial system. And if you haven't been able to check out my video on Valkyrie and Ag Eagle, I really go into detail on the steps that have to be taken in order to get through the FAA, and there really is a lot of steps. So that video is going to be right here. I suggest you go check that out. It is a lot of information, and really, once Workhorse gets through that, that is going to be absolutely amazing for their Horsefly. So continuing on, they received approval from the New York Truck Voucher Incentive Program to offer monetary vouchers for C-Series all-electric delivery vehicles in select New York State counties. That's obviously very important as well. And as we continue to move forward in the presidential race, with Biden, there's probably going to be a lot more write-offs and vouchers that are going to be able to be approved. So that's something to take a look at as well. They also closed a $200 million convertible note financing from institutional lenders and converted a pre-existing $70 million note into shares of the company's common stock, altogether providing Workhorse with over $260 million in cash, which is also a very important thing to have. I think anytime you have cash on hand and you have obviously less debt, you're really making an impact on your company, which is in a positive direction. No question. They achieved and improved an industry-leading range of approximately 160 miles per charge under urban situations for its 2020 Model Series 1000 extended range. So that was something that they had to go through CARB. They had to get that approved as well, and obviously had to get that as an additional option for people. So they offer a 100-mile, C1000, and now they also offer a 160-mile C1000. Very awesome. The big thing that I wanted to see really truly was, are they on track? Are they on pace to stay within the 300 to 400 vehicles that, they were projected for 2020? And it sounds like to me that even though they have endured the coronavirus, so we're going to jump right into that. It says mostly the fourth quarter, although we will still manufacture and deliver vehicles in quarter four. It will be substantially lower amount than our previous guidance. So as you can see, originally the 300 to 400 is being affected, which to me isn't the best of information. It says that we are unable to give a specific estimate for the following reasons. The inability of our primary battery supplier to meet our volumes due to capacity issues and COVID-related slowdowns. So that kind of makes me wonder too, how far are they truly behind? Because now their battery company isn't able to provide their service, which then is slowing down the production of the Workhorse trucks. That's really a bad look. And then it says COVID-19, having more than 36% of our production-related staff currently out with the virus or quarantine awaiting results. With the daily increases in cases, we must protect our employees' health to do what we have to modified our assembly process. And I think right there, obviously, you want the health of your employees. You want to look out for your employees. You want to show that you care for them, because then they're loyal to you. But I think with having that impact as well, and that can continue on into next year, that really is going to have a huge impact on the company. And it shows the reason and the importance of them continuously increasing their working people. And the reason is because if someone goes out, how much does that damage the production line? And so they really have to start increasing their staff, and they really are going to have to start expanding in order to get these backlogs filled. Because if they were to get a massive order like the USPS contract, they're going to need to be able to fulfill that. And if they're getting hit with a pandemic, don't get me wrong, many companies are getting hit and they're having to shut down. But if you're, trying to meet a deadline and trying to really get to what you need to be getting, they're going to have to ramp up production. They're going to have to ramp up their employment, and they're going to have to get a lot of people in there. And so I think those are some things that they're going to have to start accomplishing here in quarter four. And it sounds like it's going to bleed into quarter one. Two major pieces of information, I guess, that were not included in their highlight script was the fact that they are working heavily towards a refrigeration truck. And I do feel that that is extremely, extremely important as this company continues to grow and expand. Obviously, they can't put all their eggs in one basket. They can't solely just depend upon the United States Postal Service contract, because if they did and they didn't get it, or they only got a certain amount, this company would not be successful. And that's definitely not what they're wanting to do. They're wanting to grow. They want to be successful. They want to keep growing their network, and they want to get out there. And this is only one way that's going to help them do that, and that is refrigeration. I think that's extremely, extremely important. And for them to already be working on a prototype shows and tells a lot about this company. They are wanting to be successful. They are wanting to take those strides, and they are willing to do what they have to do. I like that about it. Dwayne Hughes then obviously read a non-disclosure agreement, with the USPS contract. They asked him the question. He basically stated like, hey, obviously we're blind to the non-disclosure. We can't unveil any information on the United States Postal Service contract. But what I think is significant about that is if he is reading that, obviously nobody asked the question. But if he's already reading that, I personally feel that they got a portion of the contract. And the reason is because I just feel that the way that it was handled, if he's already reading it, doesn't want to get asked about it, then that tells me that they know something probably behind the scenes. I personally feel that Workhorse has had an idea about how much they've had in this contract for a long, long period of time now. And the reason is because the steps they have taken in order to get to where they're at. They have $260 million cash on hand. They obviously went out and got the partnership with HITACHI. They are obviously in the back of their back pocket have a plant with Lordstown that they could start using as well to manufacture vehicles. I mean, there's just a lot. It sounds like to me they really need to get their battery situation squared away. Once that gets handled, they get past the COVID aspect or the vaccine comes out. That's really going to help this company start taking the steps forward, and I think we'll start to see some major strides taken by this company. The next thing I want to get into is the financial results, and I do feel that some of these results are what actually had a negative impact on this quarterly earnings, and rightfully so. I mean, when you don't put out good numbers, that's going to have a negative aspect. So swinging on over here, sales for the third quarter of 2020 were recorded at $565,000 compared to $4,000 in the third quarter of 2019. Now, in my opinion, that is actually pretty decent for where it was a year ago, but it needs to be a lot bigger. $565,000 is not a very impressive number. And, you know, when you really look at it big picture, the trucks cost about $60,000. So that right there tells me that that's not a lot of sales. Cost of goods sold increased to $2.8 million from $1.4 million in the third quarter of 2019. I do think that that was actually pretty solid. Selling general and administrative expenses increased to $6 million from $2.6 million. Obviously, as you continue to grow, expand, get more things, it's going to cost more. That just makes sense. Research and development, this is one that I wanted to see as well. It looks like it stayed flat. $1.6 million is what it cost. Obviously, they're putting in a decent amount of money into research and development, rightfully so. You want to make sure that you're doing what you're supposed to be doing and not only getting the research, the development, but you're progressing in the right direction. I do like to see that. Interest expense has increased to $74.3 million compared to an interest expense net of $5.9 million in the same period last year. The significant increase in interest expense was almost exclusively due to the change of a fair value of the company's convertible note, the loss of its conversion stock, and the loss of its redemption of Series B preferred stock. So as you can see right there, that's the reason why for that massive increase. It says the net loss was $84.1 million, compared with a net loss of only $11.5 million in the third quarter of 2019. The increased net loss was due to the increase in interest expenses just noted. With these considerations, the company believes operating income would be better indicated of operating and cash performance. Operating income during the period was loss of $9.8 million compared to the loss of $5.6 million in the third quarter of 2019. So that is a massive number, and obviously moving forward, we'd like to see that reduced down. So as of September 30th, 2020, the company had cash equivalent and short-term investments of $80.2 million compared to $23.9 million as of December 31st, 2019. Subsequent to the third quarter end, the company entered into and closed a convertible note financing with a group of institutional lenders for gross proceeds of $200 million. Obviously, we know about that, but that is absolutely massive. And as it continues on right there, it says that they eventually get to the $260 million. I think having $260 million cash on hand really frees up and allows you to make some moves. I think anytime you have that much cash on hand with, obviously you don't want a lot of debt. And the reason is because you don't want a lot of debt. But when you have that much cash on hand, you're able to do, and you have some leeway to do some things in order to make your company successful. So I definitely like to see that. So that right there is the third quarter financial results. And now it's going to be time to break down this chart. I appreciate you guys swinging by and checking out this video. I know many of you guys are Workhorse investors. Many of you guys are deeply involved with Workhorse, like myself. I am very bullish on this company, and that's exactly why I want to do this video. I do want to remind you guys, I am not a financial advisor. Anything I say in this video is for pure entertainment purposes only, and hopefully this video provided you exactly that. Entertainment! And you guys know how I do it. If you like this video, smash that like button. It helps out tremendously. And if you enjoy the content, because I'm going to keep the content flowing, subscribe to my YouTube channel. And as always, have a good day.